Wow, the Chinese stock market dropped more than 8% today. This is fascinating stuff. There are a bunch of like warning signs, like a danger, Will Robinson, that are flashing. I don't personally think that these are like immediate risks to us here in the United States. The Dow is down about 100 points, which is not that big a deal. But I think that systemically, economic system-wide, we are at a place right now that's not that different from this point in time in 2007, which is you've got a presidential election year coming up in the next year, and you've got a bunch of leading indicators that are pointing to a recession, if not a depression. And the government, in this case, the government of China, but also the Fed, everything from quantitative easing to just keeping interest rates so low, is doing everything they can to just hold off the crash until after the election. Which is why I titled my book "The Crash of 2016." I'd be surprised if it happens this year, but I would not be shocked. But if November 2016 comes and we have not had a really significant economic crisis in the United States, it will happen within a few months after the election, in my opinion. I could be totally wrong on this, but this is the Guardian today wrote under the headline. Well, actually, this is a Reuters piece. China stock market hit by biggest one-day fall since 2007. Now, those of you who have been long-term listeners of this program will remember back in 2007, I did two things on this program and on the local program that I was doing on KPOJ in Portland, Oregon. I was doing a 3-hour local program followed by the 3-hour national program, all out of the same studio there in Portland for about 5 years. And in 2007, we had several of these, everybody was buying real estate. You'd see these things stapled to telephone poles, come to this seminar, learn how to make a fortune in real estate. Because, you could anybody could buy real estate and turn it into a rental property and watch the equity grow over time and all this kind of stuff. And everybody was jumping in, and it was like, it's just like the old story of, fill in the blank said in 1929 that he was going to get out of the market because the shoeshine boy was giving him stock tips. And back in 2007, I did two things. The first was I pointed out that in the first or second quarter, I forget which, I think it might have been the second quarter of 2007, we had an over 30% drop in housing starts. And just by coincidence, I had been reading a history of the Great Depression. And it pointed out that the Great Depression really started with a fall in housing starts. Down in Florida, it started out, and then it spread nationwide. It became contagious. And that then led the following year. This is 1928 that happened. And in 1929, of course, it caught up to the stock market. So we'll get to that in just a second. And, I said that. So number one, I pointed that out on the air, and I said, this is a bad sign. And number two, on the local station in Portland that I was on, there were a couple of different mortgage brokers that were advertising with us, and I started refusing to voice their ads, which made management quite unhappy. But I was like, this is not good. These mortgage brokers basically saying, hey, free money, want to buy property? And of course, what they were doing was they were selling those mortgages to the big banksters at a premium so that they could be turned into derivatives, which, led to the crash. We had a bankster-created crash, and we've got another bankster-created crash on its way. So the Chinese shares dropped 8%. This is, as I said, from Reuters. The Shanghai Composite Index lost 8.5%. Stocks fell across the board. 2,247 companies falling, only 77 gaining. More than 1,500 shares out of the roughly 2,500 shares listed on that Shanghai Composites, Shanghai and Shenzhen Stock Exchange. It's called the CSI 300. Oh, no, that's the index, excuse me. More More than 1,500 of these shares dropped 10%, at which point the Chinese government stops trading. Stops the trading. And this just came up. This in the New York Times. It was posted 9 minutes ago. It's a Reuters story. China's top securities regulator, China Securities Finance Corp. Limited, said on Monday it would continue to buy shares to stabilize the stock market. Now, this is essentially, what we were doing in 2007, 2008 was, the Fed was, pouring low-interest money into the economy to try to keep the economy from crashing before the elections in November of 2008. They were not successful. As you recall, the economy crashed in the spring or summer of 2008, and all of a sudden, all hell was breaking loose, and it did not help George W. Bush or John McCain in the general election. We got, Barack Obama became president. This is the Financial Times article by Jamil Anderling in Beijing. He says, after China's stock market experienced its second worst day on Monday, all eyes are on Beijing, where the government faces a stark dilemma and a serious challenge to its credibility. Meanwhile, here in the United States, we just got the numbers for June. Home sales, new home sales. Remember, I said I'll get back to that in just a second. Sales, this is from MarketWatch. Sales of new single-family homes in the U.S. fell 6.8% in June, the slowest pace in 7 months. The median price of new homes, meanwhile, fell 1.8% compared to a year ago. And the supply of new homes increased. Back in May, there were, it took on an average 4.8 months for a new home to sell. Now it's 5.4 months. So the housing market is slowing down. What are the other things that happened back in 2007 before the Great Crash? One of them was that commodities collapsed. A lot of people don't remember this, but the price of gold crashed, the price of oil crashed, the price of copper crashed. Commodities. And basically this was, the commodities market looking at the fact that a crash was coming and saying, when the crash happens, there's not going to be much demand for this stuff. So let's unwind our inflated prices right now. Interestingly enough, the Bloomberg Commodity Index just hit a 13-year low. It's lower than it was in 2007, 2008. And I'd say that that's because we have been so aggressively pumping the economy for the last 6 years, 7 years, that, we created another bubble. But this is, in my opinion, a major canary in the coal mine. Not only that, money is pouring out of China right now. This from Bloomberg. Robin Brooks at Goldman Sachs estimates that capital outflows topped $224 billion in the second quarter, a level beyond anything seen historically. When are we going to start calling it capital flight? So it just bad signs in general. Okay, that said, the Republicans are going to have their debate next week. Why are the Democrats not also having a debate so that Americans can see the difference between Republican ideas and Democratic ideas? Debbie Wasserman Schultz, the head of the Democratic National Committee, the DNC, has said, I'm not even going to schedule debates. We don't know when the first Democratic debate is, to the best of my knowledge. Now, that, obviously she's doing this to help Hillary Clinton, but it's hurting. I think it's hurting Hillary Clinton, and I think it's hurting the Democrats. Because if we could have Democratic debates at roughly the same time Republican debates are happening, Americans would watch the Republican debates and hear these whack jobs, fighting over who's going to cut, who's going to, what was Jeb Bush's line, roll back Medicare or do away with Medicare altogether? Here they're going to be fighting about that.
This is the Thom Hartmann Program.
Which is the perfect contrast to Democrats talking about, who's going to be more aggressive at strengthening Social Security. Come on, Debbie.